or afternoon, and then into the rest of this week. When we get to Wednesday afternoon, we're halfway through the week, and we pretty much know the trend for the week. And I think that that is not the case this week. And when you're looking at this from the perspective of the dollar and the VIX and bank, there's a bunch of mixed signals. And one thing that we're going to have to confirm here as we go into the rest of this week is the trend of those leading indicators. The one thing that has, I think, really created an environment right now where there's going to be a lot of crosswinds is the fact that our inflation data has come back in incredibly low and much lower than what was expected. And the perception of the Fed fund futures, or the perception of market participants who were previously pricing in rate hikes in 2026, you can see now when we're refreshing this, and let's get a fresh refresh on this. There's only one rate hike being priced in, and it's pushed out another meeting up into or further out into October. And then the second rate hike was being priced into December, and it's gone now. And so the perception is that all clear, everyone's ready to party again, right? But there's only one problem. The change in the direction of energy and the continuation of a dollar rally is putting us in a situation here where the future CPI and PPI prints will not be lower. The downtrend that we have had inside of crude oil, and let me get this on the actual chart here so you can see this. What is contributing to the environment here where inflation is falling? Well, when you zoom out to, let's go look at a 4-hour chart. When you look at the 4-hour chart, you can see here from essentially the middle of May all the way until our current prices, the last 60 days, crude oil has been doing nothing but falling. It's been doing nothing. It's been nothing but a downtrend. And then we changed trend. And so future CPI prints will look like this, the beginning of March. What was really interesting about the beginning of March, and even as we were moving forward here into the beginning of February, is that you can see this big wedge that was forming. When we lifted off from these levels, it was coming right out of the beginning of March. Think about what happened in March to the indices. From, say, March 1st till March 30th. What happened to the indices? Let's go and look at the actual ES chart. On the same time frame, what happened from March 30th to March 30th? Or excuse me, March 1st to March 30th. Here's the first. What's fascinating, and I remember this, there was a halfway back short that we were running into. We had broken trend. This was the fourth. The actual spike up here was the second. So we had actually come into a halfway back short from highs to lows up here the first time. And as crude oil ripped away from its support, the indices rolled over. Because at the time, there was both a dollar strength trade going on, and then crude oil strength turned on as well too. And what that translates to, this stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.